suppose, of a given. Okay, I'm seeing some questions with regards to how high can gold rally. And Khaled and Ian have done a pretty good job in answering that for everyone. And I just wanted to align with that analysis, really, with Khaled saying that gold is heading towards the December high. Ian has it in a bullish sequence as well. And I just sort of want to touch on what I talked about in the previous video ahead of the data. It was actually released round about when the data came out. And we talked about gold and silver in that video. And I also mentioned at the beginning of the video how I use the US dollar index as a gauge to help me solidify my decision making in the instruments that I trade, which are silver, gold, silver over here. Gold, silver, oil, US 30, NAS 100, SP 500, because they tend to trade in divergence of the dollar. So if the dollar's going up, then you expect gold, silver, oil to be soft, as well as the indexes. Not so much the US 30. The US 30 tends to trade at times in divergence of the NAS and US 500. But nevertheless, let's get into this. So the dollar was a conflicting read at the start of that prior video. If you want to take a look at that video that was released around about 8:30 New York, just ahead of the data. And we were talking about gold and how gold was in an uptrend, but because of the 3L on the weekly chart, which means it's been breaking up for 3 weeks in a row, to be cautious that although we're in an uptrend, it might be on the verge of decelerating. And the US dollar was conflicting at the time. So before the data came out, I mean, it could have gone anywhere, but the data's come out. It's pushed the dollar lower, and we'll look at that in a moment. And the gold price has rallied somewhat on the back of that. So if we just look at gold quickly, indeed, it is coming up towards the December highs. All right, and everyone and your auntie is going to have that on their radar, okay, as a target. But is it going to get there, and will it get there all in one day? No idea. I'm not going to pretend that I do know. The ATR is about $33 on any given day, so it does take us up into that region. Okay, not that it has to do $33 on every day. Did it do it yesterday? No, not quite. It's an average over the last 21 days. It certainly didn't do it on Tuesday. Might have done it on Monday. It's quite a wide range day on Monday. In any case, there's certainly scope for that move. There appears to be momentum in the market. That's a 15-minute chart. Nice strong move above last week and yesterday's highs. So there's definitely scope. But again, just acknowledging that we're 3 weeks of rising, going up, and up. If we look at that on a weekly basis, we can look at the boxes to help us gauge what's going on a weekly basis. So as you can see, these are the ranges of each week. This is the current week that we're in. We've broken last week's highs. Last week broke the previous week's highs. The previous week was actually an outside week. So I'd actually argue, in fact, that we need to look at that, because if that's an outside week, we could argue that that resets the count, because it broke the low and then rallied. But in any case, it's not doing that. It's saying that it broke the highs of that inside week, so that's fine. So 1, 2, 3 weeks of rise, heading up to last month's highs and potentially beyond. Who knows? But I'd be cautious, given that there's a fair bit of length already in that market, and it might be due a pullback. It already gave a tidy pullback at the start of the week, which fueled this dump and pump scenario. But it does look as though it's coming up to last month's highs. If we look at the US dollar, and this is what I want us to focus on in this video, to get a gauge as to whether this is going to come up to those highs, well, you'd want the dollar selling off. And if we look at the dollar, we can see that it was overextended on the weekly chart as well as the monthly chart. So that's a good sign for our gold bullishness thesis, because that's suggesting that the market has already pumped up and is overextended and is due a pullback. So perhaps that's what we're getting. So if we look at the market, this is on a daily perspective, we can see that yesterday was a dump. That was the correction of the 3 weeks and 3 months of rise that we were talking about a second ago. So if we look at all those weeks, okay, so 1, 2, 3 weeks of rise, far more than that, in fact. Well, there's an inside week there. 1, 2, 3. And the inevitable pullback, which we've got this week, all week, which has fueled the rise in gold. Now, if we look at the daily boxes, what's interesting, which is what I want to draw attention to, is the following. So we dropped Monday, Tuesday, Wednesday. Okay, so day 1, the high of last week, bears in the market. That's confirmed with a continuation on day 2. So day 1 shorts, day 2, day 3. And what we might find, and this is what I want to caution against, is that because we've got 3 days of shorts, what we might find is that the dollar is actually going to turn around and squeeze higher into those shorts. Now, what we've done on the day, however, is that we've taken out the highs of yesterday. You can see it better on a candlestick chart. We clipped the highs of yesterday over here. That then dropped back inside. So it was a very, very shallow test of yesterday's highs. So is that convincing? I'm not so convinced that that's the end of the story for the dollar today. What it could do is come back up to retest those highs, because I'm not sure that that's a strong enough test. But nevertheless, at the moment, what we're seeing is a fake out high. Okay, that's bearish, coupled with a fake out high on the weekly chart. So that happened at the start of the week, but that happened at the start of the week, not recently. And since then, we've already got a lot of shorts in the market. And not only that, we've come down to retest last month's highs. So we're still in breakout. On the monthly chart, we're still bullish. And this is what I'm building up to anticipate a continuation of that bullish breakout on the monthly chart. Therefore, I think the dollar bears could struggle today, and I think the bulls could well stay in control. So, if we look at yesterday, that's quite a strong rejection from that monthly level. It even took out Tuesday's lows. Yes, we've had a bit of a pullback, but we need a pullback to continue higher. Dump, pump. And the line in the sand for me is going to be Tuesday's lows. If we break below Tuesday's lows, then I'm going to be aligned with today's fake out high for a continuation lower, which would drive the gold price up to that monthly high that we looked at a moment ago. But if we can't break below Tuesday's low on the dollar, I would be cautious aiming for that gold monthly high, or maybe we'll take the monthly high and that will be it. I don't envisage that it will push through if the US dollar does not break down below Tuesday's low. If it does break down below Tuesday's low, which is respecting pretty much to the pip at the moment as support, if it does break down, then I'd expect gold to continue rallying. If Tuesday's low holds, then I'd be looking for a reversal trade setup in gold to short as the dollar pumps and continues within the monthly breakout, eyeing a continuation. So let's have a look at gold again. We want to keep an eye on that level there. You can put an alarm on Tuesday's low in the DXY. And look at gold, just to get some context with what we've looked at here. Okay, as you can see, as the dollar starts to rise, as we've seen, it's already starting to top out. We've got 15 minutes before the Wall Street Open. Could that be the high of the day? Is it going to dump into the Wall Street Open, then pump, take the highs, and then potentially give us a reversal trade setup to go short? Which will be a risky trade because you'll be counter trend of the bullish breakout of last week and yesterday's highs. So quite a few moving parts to contemplate as always when you're day trading, but this indicator helps you break it all down and you trade what you see. At the moment, I can't go short. The indicator tells me not to. It's based on 8-hour conditions. So far, the Asian highs are intact. The current 8-hour highs are intact. But if they were to be broken to the upside in this new 8-hour candle that's opening up and coming back on the inside, so a pump above, stop hunt back inside potentially for a sell-off, which would be a high-risk trade setup because it's counter trend above yesterday's and last week's highs. But nevertheless, it could be an opportunity in the coming window.